Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news again. And guess what? We've got Nick Bendel here to bring us the news. Hello, Nick.
Hello, Owen. Thank you as always. Great to join you.
Thank you. And what's been happening in your week for the past week?
My week for the past week.
Yeah.
My week has lasted for exactly a week. Unfortunately, I want to be more efficient and I want to get my week done in only 6 days, but it keeps taking a week, and it was a good week. Got a lot of stuff done. My business, Hunter and Scribe, we write content for finance and property businesses, and we worked with our usual range of regular clients over the week. We wrote some social media posts for an accountant, a media release for a non-bank lender, a blog for a mortgage broker, an email newsletter for a commercial finance broker. Just a pretty standard week, and we're lucky that we get to work with so many good clients.
Cool. Well, that sounds great. And yes, you do good work, Nick. And because I've known you for so long now that yes, I've seen all of the work that you can do. And all of your clients are usually always happy with it.
Well, we try to make them happy, and we do work with a lot of good businesses. Very lucky for that. And yes, we have known each other for a long time. We used to be quite young.
Yes, we used to be. Well, so some of us look younger than others. But yeah, not going to divulge all the information. But yes, eat more healthy, drink less, and exercise more.
I'm not trying to flatter you. You look great for your age. I know you're 80 and you don't look a day over 76.
You're almost right in one respect. But yes, the other is a bit far off, Nick. So I'll let you guess which one's which.
Okay.
But
And how's your week been?
my week, it's always a fun week in property management, and it feels like about 2.5 days my week. So it's yes, we don't get time to stop. So lots of running around, getting lots of things done. And we had end of month, which, as you know, happens every month at the end of the month. First business day of the following month actually is when we run end of month. That's when everyone gets paid and we get everything going, and we reset for a whole nother month. But it's we're moving forward. But Nick, what is in the news this week? You've brought us 3 stories as usual.
I have indeed. Our first story today is rising inflation makes another rate rise more likely. The annual rate of inflation rose from 3.7% in February to 4.6% in March, according to the Australian Bureau of Statistics, and that increase was driven by a 32.8% jump in automotive fuel prices between February and March, and the inflation rate of 4.6% is likely to move even higher in the near term, given that March was the first month in which prices were affected by the Iran war. Inflation will dominate the conversation when the Reserve Bank decides on May the 5th whether to hold or increase the cash rate. The day after the inflation data was released, the market increased the likelihood of a rate hike from 69% to 76%. Commonwealth Bank economist Belinda Allen said the Reserve Bank faced competing signals, with inflation rising but the economy slowing. Inflation remains well above target, she said. The labour market is still tight and cost pass-through from the war is occurring faster than usual. At the same time, business and consumer sentiment has weakened and cracks are emerging in parts of the housing market, making this another line ball decision. Okay, Owen, 2 questions. First, what will the Reserve Bank do at its May monetary policy meeting? And second, what should the Reserve Bank do?
Last week I was on a bit of a hold bias with the budget coming up, but I'm thinking now that we'll be looking more at an increase because they need to make it blatantly clear to this federal government that they're the adults in the room and the government needs to act the same.
So you think they will raise rates, and you also believe they should raise rates?
Yeah, they need to. It's funny that well, it's not funny, but it's interesting to see that there are a lot of people hurting in the economy, and because of the rising cost of living, rising cost of fuel, and especially rising costs of rents. But there's a lot of people still spending a lot of money. You don't see a lot of restaurants or cafes complaining about loss of patronage. And that's usually the first thing that goes when people are hurting. At the hip pocket, they stop going out. They stop spending money on the smashed avocado on toast, as they talk about. So, yes, maybe there's a bit more pain to be had to be able to get people to stop spending, and so that in some areas of the economy that we can help, we might be able to see some prices drop because of a lack of demand.
The RBA is making its decision on May the 5th, and then the federal government is releasing its budget on May the 12th. Should the federal government be providing any sort of inflation relief in that budget? And if so, how much?
Well, the inflation relief should be in the way of reduced spending. The best thing that the government could do is reduce spending, make lots of surplus to be able to pay down government debt. So yes, it's that's the number one thing that they have to do. If you're talking about the government providing relief in terms of cash handouts, then all that's going to do is inflame the situation, just like they've inflamed the property affordability issue by giving more handouts out.
Warren Buffett famously advised investors to be fearful when others are greedy and greedy when others are fearful. Right now, it seems like property buyers are becoming wary due to the global and economic uncertainty. But should investors actually be looking at this as an opportunity to buy a quality property at a discount?
Yeah, absolutely. Anyone who's in a position to be able to buy should be out there looking. And I can tell you now, I've had 2 phone calls today from people that are looking at selling their property. They want to take out any equity so they can pay down other debt. This is what the RBA has been trying to do, to get people to think more about cutting their costs, maybe reducing debt, and thinking about how they can start saving instead of spending.
Let's move on to our second story. Economist lays out prescription for more affordable housing. Ray White Group Chief Economist Nerida Conisby has given the federal government 4 rules to follow if it wants to improve affordability in its upcoming budget. So, Owen, we're going to go through these one by one, and then I'm going to ask for your feedback. The first suggestion from Nerida Conisby is don't make tax changes that will worsen rental supply. Conisby said that when investor participation falls, renter supply contracts quickly, which leads almost immediately to fewer vacancies and higher rents. Owen, does that sound right to you? And if so, does that mean the government should leave the capital gains tax and negative gearing rules as they are?
Yes, and yes. It's couldn't agree more. Yes, if you want to hurt the most vulnerable people in the economy, then yes, start fiddling with the taxes that will hurt rental supply.
Another suggestion from Nerida Conisby is for the government to remove tax distortions that discourage downsizing, and that will make it easier for older people to move out of oversized houses into smaller homes, thereby freeing up housing for growing families who want to move into larger homes. Owen, what do you think about that one? Do we need to make it easier for people to move homes? And if so, why do we need to do that? And how do we do that?
Oh, yes. Well, this is my favorite topic, Nick. It's we need to increase the fluidity of the property market. So that means we need to make it easier to sell and buy all at the same time. So the biggest hindrance to that is stamp duty, which is a state-based tax, and which the federal government can't do anything about in their budget, but they could certainly work with the states to be able to make something work, because a lot of retirees, especially that are in big houses, that don't affect, they're in this big house and the value of that property does not affect their pension. So they're discouraged there to downsize, because if they downsize and then invest some of that money, then that will likely affect their pension. And then there's the issue of selling, paying agents' costs, and then paying stamp duty on their purchase. And a lot of the time when they're going to something smaller, the gap, the price gap, when you take into account those selling and buying costs, doesn't make it worthwhile for them to do so. So why should they? It's easier just to stay where they are and maybe spend that little bit of money in that difference to actually do up the property, if they can get some of that equity out, or if they had some cash on hand, and rather than invest it and affect their pension, they would rather spend that on the property to make it easier for them to live in their older age. So this is what is tying up a lot of big properties for a longer period of time. And not saying that people shouldn't have the right to stay in a property for as long as they want, but there's actually a disincentive for them to actually move and downsize. So, yeah.
Okay, well, I can see you really appreciated the second directive Nerida Conisby gave to the federal government. The third one is to remove housing incentives that boost demand. Policies that increase purchasing power, such as first-home buyer incentives, tend to push prices higher, particularly at the lower end of the market. So, Owen, is it time for governments to get out of the housing incentive business?
Yes, it is, Nick. It's been they've been in there for a long time because it's popular at the ballot box. But we need to start being adults in the room now, and because our economy is changing, the property market is changing, and everyone needs to change with it. So yes, because they're making a bad situation worse if they don't want to drastically cut immigration to cut the demand, then and if they're unable to increase supply in the short period of time, then why throw more money at boosting demand to make the current situation worse? It's great for the people who get in the first wave, so those first 6 months of getting in and taking advantage of it. But anyone after that is in the same boat that those first people were previous to getting into the market. So, yeah, it's you're continually chasing the ball uphill.
Finally, Nerida Conisby wants the federal government to support the property development industry. A larger, more productive industry will be able to build more homes faster. Owen, do you agree that the federal government needs to provide more support for property developers? And if so, what should that look like?
Oh, yes, and in many ways they can support. Firstly, on all three levels of government, when you're building new properties, there are so many taxes. They say somewhere up to a third of the cost of construction is taxes on all three levels. So that's just huge. So they can help, firstly, if they wanted to lower prices on new construction, is to be able to help with getting rid of some of those taxes, or delaying them, or making it easier to be able to fund that, maybe over a longer term basis. Maybe when they've sold the property, they can pay the taxes. How about that? Making it easier to be able to build now, get the finance, so it can all be done down the track. There's so many ways that they could do that. They could provide some government guarantees, for developments to be able to get out of the ground ASAP. Now, I know the New South Wales state government is doing this, and it's actually starting to take shape. So the federal government could do it on another level as well. So yes, there's many ways that they could help.
A final story. City of Sydney ponders Airbnb crackdown. The City of Sydney will consider banning short-term rental accommodation under certain circumstances, such as in suburbs where the vacancy rate falls below a certain level, or when short-term rentals outnumber traditional rentals. That would be a dramatic change from the current policy that allows properties throughout the local government area to be on the short-term market for 180 days per year. Councillor Sylvie Elsmore told the ABC that the current system wasn't working. We need to start thinking about the difference between whether someone's trying to Airbnb their house, the home that they live in, or as an investment property. The investor issue, what we're seeing more of, people owning 5, 10, 20, 30 properties, running it as a business. Because they can make so much more money short-term renting, they're taking properties off the market that used to be someone's home, she said. Business Sydney Executive Director Paul Nicolau said banning short-stay accommodation would damage the city's accommodation. Sydney relies heavily on short-term rentals to deal with the influx of tourists we get coming in every year. There's not enough hotels to provide the accommodation needed, he said. Two different views there, Owen. So the councillor who was quoted said the City of Sydney may need to permanently ban short-stay rentals entirely from the entire LGA. What would be the pros and cons of that kind of policy?
Well, yes, the pros would be that there'd be more properties come on the rental market, the long-term rental market, but the CBD area, which the City of Sydney covers more than just the CBD area, but all the properties close to the CBD area within the City of Sydney are properties that can fluctuate as the economy does. When there's a lot of tourism, there's a lot of economic reasons, as stated already, that require these properties to be available for short term. So unless there was a huge influx of new hotels, we're going to have the problem of tourists wanting to come, which we want, and they'll have nowhere to stay, or hotel prices will then increase, and it'll be difficult for and that'll discourage people from coming to Sydney as a result. So it's there's a lot of pros and cons, but is it feasible? Not really. Would we like it to be like? Would we like it to happen? Yes, there's lots of good reasons why we would like it to happen, because it'll help to bring down long-term rents, etc. But I think we need we need to have maybe limits in place of the number of properties that could be. So whether that involves getting a license from each council so that the council can determine how many properties are actually up for rental, that might be the only solution.
Okay, so just following on from that, the City of Sydney's current policy is one size fits all, with every property able to go on the short-term market for 180 days per year. So what do you think of the idea of switching to a flexible policy that could change depending on market conditions?
Yes, and that's where maybe the licensing comes in, and it's something that you need to get every 12 months, because this 180 days per year business, it's not for any period within a set 180 days. You could have 3 days a week rented on short term every week for the whole year, and that's your 180 days. And the other 4 days a week, it's vacant. So it's not really set to 180 days or half a year. You can't pick from January to June or July to December. It's those 180 days can be spread out over a 12-month period. So it's not really 180 days. It's still 12 months. And if you get a tenant for more than 3 months of the year on a short term, then that doesn't count either. That counts as a long term. So it's lots of little tricks. Again, it's governments making policy that sounds good on the surface, but it doesn't really do anything. So the licensing issue would fix that. So that there's a limit, so that they can limit the number of properties that are available at any one time.
Looking at the issue more broadly, so beyond the City of Sydney, Airbnb started with owner-occupiers renting out their spare rooms, but now most people who put their properties on Airbnb are actually investors who aren't in the property at the time when the occupant moves in. So how would you feel about banning investors from the short stay market throughout Australia and just leaving it to owner occupiers?
No, it's because there's a need for properties to be available, whole properties to be available for short-term stay. So it's not feasible. You would run into the same issue of then having a lack of supply of short-term accommodation available in particular areas. I think every local government needs to look at just limiting the number of properties that they feel is suitable for their local government area, and that's where maybe the annual license comes into effect.
Well, that's all for today. A couple of interesting things on the horizon. We're recording this on Monday, May 4. We've got the RBA decision tomorrow, and then the federal budget the week after that on May the 12th. Earlier, you said you thought the RBA would raise rates. I'm also tipping a rate hike. We will know 24 hours from now.
Yes, and you just reminded me, happy Star Wars Day. May the 4th be with you. And yes, we'll be seeing you next week with the weekly news. Thanks, Nick.